Hi, this is Aud USD pair, and today it's Monday 24th of June 2013, and the time is 7:28 GMT. We are looking at the H4 chart of the pair, and I'm using Ichimoku Kinko Hyo. This is the system I'm using here to evaluate my entry and to set up my trade. We had a very long fall of the pair, which gave hundreds of pips to our users, to our app users. And now we are looking for the next nice entry. It's going to be a short entry. You will sell, and you will monitor your trade from the H4 chart, but you will pick the entry point from smaller time frames. The entry criteria are that the H4 chart must be 100% bearish. It is. Price is below the Kumo. Leading Kumo is bearish and its edge is sharp pointing downwards, and Chikou span is turned downwards, is below past price action and turned downwards. On the daily chart we have 100% bearish picture. On the weekly chart as well, 100% bearish. And on the monthly chart we see that although the price is just touching the Kumo and the Chikou span is turned downwards below past price action, but it's still above the Kumo, biases are bearish. So we were here on the H4 chart, and we go to the smaller time frames, which will determine our entry point. H1 must be totally bearish, 100% bearish. It is not 100% bearish now, because although price is below the Kumo and the leading Kumo is bearish and its edge is sharp pointing downwards, Chikou span is turned upwards. We want it turned straight down the moment we enter. There is a minor correction here, and we must wait for it to end before we enter. M30 chart. We see that although price is below the Kumo and the leading Kumo is bearish, and it is not very sharp though, and we have Chikou span turned upwards, which is not what we want to see. We want it to be as it is below past price action, but turned downwards, looking downwards and being straight down. So we will wait for this to change. M15. We see that although price is below the Kumo and the leading Kumo is bearish and its edge is not very sharp, but it's pointing downwards, but we want it sharper. Chikou span is going up. It's not going straight down. Although it is below past price action and below the Kumo, it is not as bearish as we want it to be in order to enter. So we will wait for this upward move to finish, and when we see Chikou span going down, straight down, then that will be a good criterion for an entry. The same goes for M5 chart. We must see Chikou span going straight down. On M1 chart, we must see this bullish picture reversed. When price goes below the Kumo and leading Kumo is bearish and Chikou span is straight below the Kumo and straight below past price action looking downwards, then we will check that this is a 100% bearish picture here on the M1 chart. We want 100% bearish picture here on the M5 chart. The only thing that must change is Chikou span. It must be turned downwards. 100% bearish picture on M15 chart The only thing that needs to be changed is the Chiku span. We want it to go straight down. M30 chart must be 100% bearish. We want Chiku span to turn straight down. H1 must be 100% bearish. We want Chiku span turned straight down. And H4 must be 100% bearish. It is. And here we have also Chiku span turned down. So once the smaller time frames are 100% bearish, we enter. We pick our entry from M1 or M5. I prefer M1 because it is the smallest time frame. It gives surgical precision to the entry point. When you see an aggressive bearish move, bearish breakout on M1, and the wave moves to up to M5, M15, M30, and even shows to H1, and you see Chiku span turn downwards, straight downwards to all of the smaller time frames, then you enter. You enter short, and you place your stop loss at this level on the H4 chart, which is above the bearish Kumo, above the flat top of the bearish Kumo. See if the distance between your entry and your stop loss is less than 3% of your account equity. If it is more, don't take the trade. But I believe this is going to be a very profitable ride, very profitable fall. But we can't guarantee that price will not make a correction, because after this big fall, we should expect a correction somewhere. You see that after this fall, we had this big correction here. So after this fall, we should expect a corrective move. So make sure that all our entry criteria are absolutely met before you enter, because at any moment the pair may start going up. This is not the main trend, of course, but it may be the correction. You don't want to be trapped in there, and as it may be for 100, 200, or even a bit more pips. Okay, don't rush. Wait, be patient. Wait till all the entry criteria are met. You trail your stop a few pips, not a few pips, more than a few pips. Measure this distance and use it as a measure, as the number of pips that you should keep your stop away from the new lower high. When price falls, it makes lower lows, lower highs. So the previous lower high is this. The lower high before that was this. When price makes a new lower high, wait till it makes a new lower high. That's what we are afraid of, and we have put our stop loss here. Otherwise we would have put it here. So if the price makes a new lower high and falls, and it's ready to make a new lower high, when it's ready to make a new lower high, it has already made a lower low, you trail your stop from here above the new lower high. Okay, so thanks for watching and happy pips.